So, how is the real estate market doing today? Or more specifically, the housing market? That was an important question prior to the great financial crisis, so I thought it would be inappropriate to ask the same question today. Luckily, we have the help of the data masters at Black Knight who analyze the most important numbers in housing finance. As an investor, this information is important for several reasons. First, it gives us an idea of the health of the housing market. And since housing is such a large part of the overall economy, it gives us an idea of that too. Since we're all buyers, sellers, renters, or owners, it gives each of us an idea of our own circumstances. However, as investors in REITs or other real estate related companies, it can give us an edge. So here are some key highlights from Black Knight you might need to know. So let's start with some basic numbers. Mortgage delinquencies, which are loans 30 or more days past due but not in foreclosure yet, were down 3% in May. Delinquencies are at the lowest level since January 2000. There were 39,000 foreclosure starts, which is the lowest number in 18 years. The number of loans in active foreclosure was the lowest in 13 years. However, 9 states did experience an increase in delinquencies. Expensive real estate markets such as San Francisco, San Jose, or Seattle show the lowest delinquency rates. However, early stage delinquencies, which are 6 months after loan closes, are rising. But overall, you can see from these two charts here that the health of the housing market is reasonably decent. And further, at the end of June, 8.2 million homeowners were eligible for refinancing. This is the largest number of refinance candidates since late 2016. 6.3 million more refinance candidates than when interest rates peaked in November 2018. 35% of borrowers who took out mortgages in 2018 could now save about 0.75% off of the first lien rate. And nearly 44 million homeowners have more than 20% equity in their home. That means there is over $5 trillion of tappable equity. And tappable means your total outstanding home loans don't exceed 80% of your home's value. So overall, the health of the housing market is quite good. There's a lot of money out there. So don't listen to the naysayers and the chicken littles who say that the sky is falling. Always be careful. Look at the numbers and make sure that they're not being misconstrued because right now the numbers look reasonable. So here are the important conclusions that you need to take away from this information. Essentially, the national and the regional picture from Black Knight shows a good housing market. Low foreclosures and delinquencies mean the housing market is less risky than it was in the 2000s. Strong loan approval standards mean a 2006 to 2009 style housing crash is not likely. The high number of refinance candidates means housing can get more affordable for many millions of people. In turn, that money can be put back into the economy with spending. The record amount of home equity means homeowners have access to home equity financing products, which are much cheaper than credit cards. Overall, the real estate market is in reasonable shape. And that brings us to this last chart I want to show you. So lastly, we'll take a look at this chart here, which is Altisource Portfolio Solutions, and the symbol is ASPS. For disclosure purposes, I do not hold any shares of ASPS at this time. Now, this is a monthly chart that goes back to 2010, and Altisource provides services and technology for the mortgage and the real estate industries. So, among other businesses, they deal with foreclosures. So, if the housing market goes south, you look toward ASPS. And as you can see by the chart, and as I told you, the housing market looks good. And this reflects that. It's only going sideways since, say, 2016 between these channel lines here. But again, if the housing market starts to go south, this is going to pick up. And you can see that in the time frame of 2009 all the way through 2014, they had a pretty good ballistic style chart. Looking here at the MAC is bottom there in 2015. It's made its way up to the zero line, but it's still kind of simmering. Things are fine in the real estate or the housing market, so this isn't going to percolate for a while. But you can see all these oscillators, they're asleep. So for right now, it's just a stock to keep in mind for when the market does turn south. Once again, when the market turns south, ASPS is going to run. So I keep my eye on this. But as usual, even if the housing market is going south, you're going to need to conduct your fundamental analysis. So keep this in mind, keep it in your pocket. This is a rocket that could blast off if things go south. And so for today, that's ChewDog Charts. Thank you.